Let me argue a little bit on the other side of where I normally would. So let's just assume that the consumer's as strong as the banks and everyone else says they are, and you can kind of see it when it comes to some of the higher end demand. And the China recovery, because they're stimulating so aggressively, happens the way that, you know, some are now expecting. So you have that inflationary upside coming through on the energy front, on the commodities front, on the input front. And because there is still sufficient demands to meet that in the US, you have another bout of inflation. Do you think the Fed's going to be able to hold their guns and not hike into that?
No. So, see, that's exactly what the fear is, right? That we get the upturn. Now, we saw it happen in Europe, right? In UK, the inflation turned back up, and that caused the Bank of England to get more aggressive. If that happens in the United States, and it's very likely that what you say could happen, right? We could see inflation pick up, and inflation lifts its ugly head again, then the Fed's going to be forced into even, I think, a more aggressive position, and then that will cause, some instability in the market as it pushes back. Because that, if it turns up, that could cause the Fed to go 50 basis points versus 25, if in fact it does what you say. And look, there's a possibility that that could happen. I've been talking about that for a while because that's exactly what happened in 1979, 80, 81, when they thought they had it under control. They pulled back and suddenly inflation reared its ugly head, which forced Paul Volcker to jam rates up to 21%. I don't think we're going to 21% on rates. That's not what I'm saying. But you could see that same scenario playing out where it turns up and then the Fed has to get aggressive once again.